go. We're cooking, baby. We're cooking. You can smell that crispy, warm aroma of that fake meat, baby. Of the fake meat. Apparently a little bit of drama coming out with TopStep. You know, TopStep has denied owning Project X for all these months and since it came out, but it turns out they do own it. They have a monopoly on the Project X platform. Sold a runner for 5,900%. Beautiful trippy, Mike. It's amazing. Rasky's playing out. The big red dump at the close yesterday is turning into a big red dump here at the open. We have a 25,200, 25,187 liquidity. What is Project X? The first rule of Project X is you cannot talk about Project X. His name was Robert Paulson. His name was Robert Paulson. No, I'm just kidding. Project X is the platform on which many prop firms provide for their traders. So TopStep X is a version of Project X, and everyone uses it. Whatever. Still coming off here, 25,220. We have liquidity down to 200. Coming on down. What's up, YouTube? How's it going? $25,217, 216. This is weekly lows right here. We are toying with 203 before we come on down to Monday's lows. This is a pivot from yesterday and the overnight session, and well, the overnight session times 2, and then yesterday's lows. So this 203, 205 area is very crucial. They give that out. We're going to attack lower 25s. Obviously, this is a lot out of the gate here. If I'm looking for a big sell-off, I don't really like to start the day with a big red candle, because that usually screams they're going to go bounce it on. They're going to bounce it on us at least first. Maybe fill the daily gap, maybe. Great movie. It is a great movie. Crash today? I don't know. Gold's been acting weird. There's a whole bunch of warning signs out there. A lot of weird activity going on. If you saw the tweet yesterday that there are some liquidity issues, private credit is beginning to get destroyed on the regional banks. That's one of the reasons why KRE, which is a regional bank ticker, dumped last week. It's the reason why we're seeing a lot of pressure along the lines of some regional banks in the United States and in Great Britain. Big red candle still dumping all the way down, baby. All the way down. So far, we're down about 100 points almost. About to fill the 100 points, and down we have aggressive put buying, call selling to finish out the Rasky Red. Just a Rasky Red morning, baby. Yeah. Shellacked on open. What'd you do, farmer? What happened? Red all the way down, 175. Let's take a look at ES. 67.65. We have aggressive put buying, call selling. Talking about BYND. Here's the 30-minute chart on NASDAQ. Let me switch my screen over. Drilling. We have this big SR area right in this area that we're coming up on. More precise, I would probably give it a range. Let's go about there. So roughly 163 will be the support. Once it takes out that, it will fill the weekly low. A very aggressive open here. 945 is obviously where I'm coming along. Here come the halts. Yeah. Still going down. There was some beautiful high volume 3C bounces on gold last night. If you remembered, I was sitting in the living room with the family, and all of a sudden my phone goes off and I get a volume alert on gold. I'm like, what the crap? Like it was a regular session, a New York session style volume alert. I'm like, why am I getting volume alerts on gold? And I look, and there's more volume than the entire session yesterday in the overnight session. And I was like, man, that's crazy. It's crazy. So beautiful 3C bounce. How do you set your volume alerts? Yeah, any tips? So if you go down to the lower part into the volume candles at the bottom and you right click, you could set a volume alert. And it said add alert on volume at 66K or 67. Holy crap, everywhere I see 67. It's driving me nuts. I wish I never heard of that stupid thing. Anyway, you can set a volume alert here and then whichever you need it to be. You could set it for 1,000,000, 500, whatever you want. So with a volatile product such as gold that's moving a lot, I usually maintain volume alerts on the chart. So if something crazy happens overnight, I get an alert. Now I keep them high enough where it's got to be something crazy. So they don't hit all that often. But last night gold hit. It was a tremendous amount of volume. So I came, screaming into the office. I brought up the gold chart, and sure enough, they were getting pummeled. And then they had a beautiful bounce. Still top wicking, coming down. Oh, man. We're only 7 minutes in here, so nothing crazy yet. Set in the 1 minute, doesn't matter. It doesn't matter. It's a quantity you have to set, so it doesn't matter what time frame you set it on. Let's talk about relative volume. How far do you track back to confirm high volume spike? Doesn't matter, honestly. I don't have a set number of candles. It's just whatever the current environment is doing is what I am looking to do. So if you look, for example, let's go back to look to yesterday afternoons on the 5 minute. Obviously, use some common sense that obviously this is a high volume spike relative to this environment. This is a high volume spike. In this environment here where it's super low volume, that would be considered a high volume spike. But it would behoove you to demand a high degree of volume. Because if you're going for every little volume spike, then you're going to take like 20 trades a day. And most likely you're not going to have that great of a win rate. So if you want to clean up the quality of your entries, then demand a higher degree of volume. That's going to help you increase the quality, and it's going to reduce the number of trades you take. If you wait for a significant volume outlier, which you'll get a couple a day, then you'll big time clean everything up. You'll trim the fat. 6-7 is dying out. Thank Jesus. That's terrible. Pure brain rot. That bounce on gold last night was a thing of beauty. 3Cs worked perfectly. It did, K-Trade. It did. What banks did you say were defaulting? I forget the name of one. They were just regional banks, so it's not any majorly known banks. It's just regional banks that were defaulting on $50 million and $100 million loans. And then, London's seeing some private equity issues. Now, if you notice what Michael Gayed's been talking about, is that the past year he's been screaming about private equity. That's going to be the cause of a lot of the banks to go under. And once the banks go under, everything that we talk about, all the nonsense with Russia war and Ukraine war and Israel and Gaza and China and all these tariffs and nonsense, the thing that's going to kill us all is going to be the banks going under. That's when you start hitting the pocketbooks of the lobbyists and the politicians, that's when things are going to go under. That's what happened in 2008. That's happened in 1987. That's what happened in 1998. All the crap. All for different catalysts, same result. The banks got hurt. And when the banks start getting hurt, that's when things start getting a little sketchy. And that's what he's been saying, is that private equity in the banks is going to cause a lot of mayhem. I just posted an article last night that looks to be the case. Is there room to create a continuation strategy on high volume spike as opposed to reversal? Yeah, so the 3Cs can help you in a number of different ways. They can help you get into a trade on a bounce or a rejection. They can help you stay in a trade through a continuation because of lack of a 3C. And just kind of determining what's going on, because you can have high volume spot. Like if you're long, let's say you're long here. Let's say you're long and the price action comes up to the prior resistance right here. Right here, roughly 25,280. And you want to determine, are we going to blast higher? Do I need to stay in the trade? It's possible to have a high volume spike here as we enter, and then it just kind of stays stagnant. So we have a high volume spike as sellers hit, but the buyers are overcoming, and then you have an absorption pattern that kind of just chills, and then we breach. So you have to learn nuances. Now, if you have multiple touches with multiple high volume spikes, then the chances, most likely, is that we're going to have at least a small retracement to gather some inventory and then go. So it really determines on how much volume you're getting on a certain amount of candles, what's the price action we're looking to, because the 3 C's is a dance between the price action and the volume. You have to be able to translate what's happening here. Do we have multiple high volume touches that are showing sweeping red rejections? Are we having just a singular high volume spike and the price action is glued, which indicates absorption for a break higher? There's a whole bunch of stuff here to go over. So it's that's the experience part of things, where you have to kind of understand what's going on with the price action. So far, we do have a beautiful 3C bounce on the 1 minute. It's a little early for my taste, and we've got 3 minutes before I take a trade, but they saw it fit to go ahead and dump and pump, which has been the whole week. The theme this week has been just range. Buy every dip, sell every rip. That's all it's been going on since Monday. All big crashes seem to come from defaults. Yeah. I read Anna's books. Great read. Nice, Cash. Good stuff. It's a fantastic book. That'll change your life. Change your life. Oh, it's Halloween, which means we get these weird sound effects in Discord now. Good morning. Good news above my spouse medical this morning. Beautiful, Damien. We'll see the card list. I'll keep you in my prayers, big guy. Glad things are going well so far. Bounce off pre-market low, which is last session low. Yeah, right down in this area. This whole block, this 160 block on NASDAQ, is going to be crucial. Looking around the market, what do we have? NVIDIA was briefly red, but they bounced and they just now put a new high in. Apple's red, Amazon, Meta's all red, Tesla's red, mixed bag. Google's up 2%. The X's are 60% red. So the general market is about 60% red. VIX is 4% green to 1863 as volatility remains heightened. Bonds are still green. Oh, they just ticked over to red by a penny. And yields are still down. So I'm not seeing any risk-on behavior with the bonds. Which is, like I said, there's a lot of weird stuff, a lot of warning signs. Although admittedly the price action continues to look bullish. What's up, Hassan? Still going green. I've got a minute and a half before I'm hitting my 9:45 time. What's up with gold? Crazy moves, man. Look at the daily chart on gold. The biggest move in 12 years on gold. We went from 43.98 all the way down to 40.20. So nearly 400 points on gold. And now they put on a tremendous bounce. So we'll see what happens with gold. Take a look at the VIX. VIX is holding 1855. Still elevated. Still elevated. NASDAQ is completely undoing the entire red. That's why I was saying if I'm looking for a red day, I do not like to see too much red out of the gate. That screams liquidity grab for a higher price. And that's exactly what they're doing here. Too much red out of the gate will get people too bearish. They put a little bounce liquidity into it, and then they scream it higher. If I want to see a red day, I need to see a green open or at least a flat open, and then roll it. Otherwise, you're going to get trapped. Still going. Still going. Recession probability is now at 93%. Interesting. Data today, let's take a look. Nothing at the top of the hour. The next data we have is in 45 minutes. It's crude oil inventories. At 1 o'clock, we have bond auctions, and then later this afternoon, we have another Fed speech, which most likely will be a non-mover. Tomorrow, we have CPI. Nope, they took it off the books. Never mind. I thought there was no. I guess they're going next week. Next week, isn't the 28th? Wasn't it the 28th they're going to do it? No, they took it off the books again. Yeah, so no CPI. As tomorrow we have initial jobless claims. No, it's Friday. Yeah, Friday the 24th. I thought it was the 28th. Anyway, it's Friday the 24th. CPI. All right, we are now inside the trading time frame for me, the 1 minute. I do not have a good high volume spike here. So with this little green move up, if you're going to short that type of move, of course, I need volume. What do we have here? We have declining volume. No good volume spike to indicate, hey, I need to be in a short position here. So just chilling. Oh, just deleted my volume accidentally. There we go. Morning range is beautiful so far. I need to keep that block on. How much do they need to cook the CPI for? At this point, they're probably bringing Emma Lagasse out of retirement here. So, hey, we need you to cook our books. ES is 67.77. They're down 7 points. It's weird to me that we were having 3-point ranges all day yesterday with the VIX hovering just at 19. It's very odd to see that type of price action with such a high VIX and such high IV on the SPX options chain. So something's in the works. Something's weird. 1 minute gold candles were 15 to 25 points apiece. It was crazy. It was crazy. I took one trade last night on it with 1 mini, and it was unbelievable. That is a product that you have to be super careful with this volatility. Gold, like gold, kind of what Agnostic was saying last night, is that gold is a boring product. Gold is not meant to be traded like this. It's like something that your grandpa bought and stuck under his mattress for 30 years. You know, in terms of trading, it's slow, but it's got a large notional. So when you're dealing with meme stock behavior on a product that has a high notional, you're going to get wrecked very quickly. I mean, you'll be down $5,000 in 20 seconds if you're not careful with gold. You got to be very careful with gold. By the way, gold, beautiful high volume 3C top wick. Look at that. Boom, boom, and that's all she wrote. That is all she wrote. What's up, Will? Good morning. Still coming off. Loving the 3Cs, baby. A lot of people loving the 3Cs. It's working well for a lot of people, and I'm super happy. I'm super happy. Even if it can help you conceptualize what's going on in the markets. The order book was insane. Yep. Gold doesn't need an endless hype like Bitcoin. The 3Cs are really remarkable, almost unreal. It's taken me some time to really trust the strategy, but I'm there. I love it, Matt. Keep it up, buddy. Keep it up. Gold's still trickling lower, baby. It's still trickling lower. Can we get an extension? Extension. NASDAQ is coming back up. Like I said, no reason to short NASDAQ. There's no volume. So with no volume, there's no sell. So you have to maintain at least a long bias, if not long positioning, until you get a 3C indication. If you're a true 3C trader, then be a 3C trader. Is that a thing now? Like a 3C trader? Like ICT? New here, what's 3Cs? What's up? Zeroda? Or Yoda? 3C trader he is. 3C stands for 3 criteria. That's the mechanism on which I teach how to enter the trades that I take. We're all here, ain't we? That's right. All right, NASDAQ is still going. What's gold doing here? Gold's bouncing back up, still doing this little trend right here. Whatever. Flag, channel, whichever. Following the 3C rejection. How do you decide what you will trade on any particular day? Are you scanning? Yeah, so I pretty much scan I've got my watch list, which again, kind of going back to the basics. A well-built watch list is one of your number one tools that you need to have as a trader. Don't, you know, a watch list should not be, hey, I'm going to go on Wall Street Bets and find whatever's trending and stick it into a watch list. Although I think BYND maybe that should be a component of your watch list at this point. I mean, Trippy Mike's just hit 5,600%. But what I want to do is build a watch list that is actionable and quantifiable and a useful tool about a litmus test of the market. So I've got all the products that I trade for futures are right here in my futures channel, the futures category of my watch list. And I just, I scan through. Where are there 3Cs? Where's the liquidity? Where's there a big mover? And then I'll try to pick something. There we go. New high of the day, no volume, no short. So up we go on NASDAQ. It's the same exact thing since Monday morning. Buy every single dip, go higher. No shorting until you have a 3C top wick, period. I read a book that recommended spending PM to scalp moves. I think it was 2% higher of PM and 1 or 2 in play. Not saying take a position, but just watch it. Oh, yeah, 100%. So every single session, I have my coffee, I do my Bible reading, I have my quiet time, and then I get into the markets. And that is where I'm doing exactly that. I'm looking around. What's the VIX doing? What's the bonds doing? What are the big names, the top 10 of the S&P doing? What are the futures themselves doing? And I'm going to see, all right, what's the litmus test? Like, what's the feel for the day? Is it a red day? Is it a heavy day? Is it a buy the dip day? And I'm just kind of getting a feel for what's going on here. I'm going to read through the headlines and see if there's anything I need to be aware of. Most likely not. And that's it. After that, I'm going to start plotting all the lines of the equities, the overnight low, high. I'm going to figure out the key liquidity levels I need to be aware of. And then I go from there. So, and I'll be able to kind of determine what I'm looking for throughout the day, but based on that. $25,273. I just got 20 points on NASDAQ. Beautiful. Well done. Well done. Still going. Gold bounced back up. NASDAQ is still going. No top wick, no volume, no short. Continue to ride it up. In your volume video, you say that the 3C longs are easier to spot than 3C shorts. I kind of get the idea because you made you go over 3C short after 10:30. So most of the time I stick by that the 3C longs are easier to spot than a 3C short. However, that's normally indicated in a bull market or a supportive market. Anytime the market is on an uptrend, the buy the dips are easy. I mean, look at this. You could have taken a trade at any point this morning after the initial low, and you'd have been just fine because this market's screaming higher now. We're now up 120 points since the bounce. In a supportive bullish market, the 3C longs are easy because there's a lot more slop built in. You could be a little bit wrong and still make a decent amount of money as long as you're obviously just a little bit wrong, a little sloppy on the entry. Whereas on the short positions on a bull market, you have to be incredibly accurate and incredibly timely, more likely, because there's no slop in a short position on a bull market. You've got to be incredibly timely. Whereas if it were in a bear market and everything was getting dumped like 2022 or back at the beginning of 2025, then you could have gotten away with a little slop on the short position. So it's really all about market conditions. If we're in a very bearish market, then you want to be in the habit of selling high volume rips all the time. Whereas now, buy the dips, baby. Buy the dip. Hero right now is showing 328 million calls, 108 million puts. Lighter day so far, but all leaning towards calls. What is this? Join ICE today. $50,000 signing bonus. Student loan repayment. Dang. They really want ICE agents. No, I'm good. Thanks. All right, we have liquidity to 67.80. 25,300 NASDAQ, 25,100. I'm too old for ICE. You got to ice them knees, baby. Ice them knees. We might get the long here. Volume is coming in. Maybe. Gold still hanging out. Oil, nice on an uptrend. USMS just opened up their positions too. Not all Federals locked up. Yeah. Yeah. Going to remain disciplined, not take anything during regular hours. I'll screenshot my gold chart to prove it. Beautiful. Now, I posted a new podcast episode yesterday on Spotify. It's about finding other stuff to do. It doesn't sound trading related, but it is trading related. You have to diversify your interests. It can't be all trading. You have to have a love-hate relationship with trading in order to be successful. If you just love trading, then something's not right. You have to have a portion of hate for trading to get you away and go do something else. It's got to balance, man. Can't be your life. Go play some golf. Go shoot some guns. Go spend some time with your wife for once. Are you waiting for that Space Force signing bonus? Hey, if they want me to fly some remotely controlled spacecraft for a couple $100K a year, I'm down. I'll do it. I'll even take a pay cut to go do it. But I doubt they'll want me. All right, ES is dead flat. NASDAQ is hanging out at the top. We don't really have a high. We had a very minor volume spike on this top week, nothing crazy, which is why we're already buying it all the way back up. It's crazy because you really need to spend a silly amount of time on the charts, but then you hit a point. Yeah, so in the podcast I mentioned that. So in the early parts of your trading career, you've got to spend a lot of time at the chart to kind of get up to speed and learn everything. But absolutely, at some point, you don't need to sit here for 12 hours a day charting. It's just, you don't need to do that. Diminishing returns is a great way to put it. We have 246 million calls, 95 million puts. Let's go to the 5. 5 is still hanging out up here at 280, rejecting this little pivot. They didn't quite get anywhere close to overnight highs. Let's go take a look. Gold still flagging. Oil still rocket ships. Oil might have a 3C short opportunity here. Maybe. Keep an eye on this one candle here. VIX got wrecked again. The dump and pump on VIX is strong. 1, 2, 3, 4, 5, 6, 7. The X's are now 70% red. Apple's getting dumped. Nvidia's top wicking. Now we'd be waiting. Trump's going to flap his yap again or today? Probably. He's probably going to flap his yap. Big buy volume candles coming on the VIX hourly chart. Well, there's no volume on the VIX, but if you want to track something, track the UVIX for volume. The UVIX is the leveraged long product on the VIX. It's long volatility futures 2 times leveraged. So if you really want to track volume, go to UVIX. What do we see? Volume spike yesterday, volume spike today, although obviously that's the opening candle, no big deal. But if you want to start to see some potential volatility, then look for the candles on the UVIX. When leverage hits that, you know what's going to happen. In fact, if you go back and look on longer time frame on the UVIX, The volume began on August 4th and continued until the Mac Daddy candle on Friday, October 10th. Meme stocks rising. This is 2021 all over again. Yeah, tell me about it. All right, so let's see if we can get a move on oil. We don't have a confirmed 3C yet. We have a potential 3C set up. High volume. We have top wick. And then we have this move. So we need to get under, I would say, somewhere 58.71 or so. And once we clear that, you could possibly play down to 58.45, or at least even half. But keep an eye on oil. Oil hasn't been a big mover lately. We did have a little move overnight. But yeah, I would love another coronavirus crash. Well, yeah, we'll get one eventually. My question is, with this move that we're experiencing the past 5 years, this new quote-unquote new version of market, even after the crash, what happens? Do we go back to what happened before, or does that type of volatility remain? It's just we need a flush first. Like what's the new normal? Is this the end of the road for this type of behavior? Oil, nice little retracement so far. Monkeypox? Probably not. It's crazy. I have no idea what to think, man. No idea what to think. Top wick. NASDAQ. No high volume, but still top wick. Go oil. Keep an eye on oil. 3Cs on oil. Oil might lube up that downside move. Here comes NASDAQ. A little bit lower. There you go. So the 50% move would be first target for this, which we've already achieved right there. After that, once I take this out, there's no real obvious targets to close except the low of the day, which would be 58.45 on oil. So there's your targets for oil. The big guys keep getting more money, so I think volatility is going to slowly keep getting higher over time. Well, it's pretty crazy, man. It's pretty crazy. Krispy Kreme's up 25%. Wow. That's like some gold to us. Little Krispy Kreme. I don't know, man. We have a donut place nearby that's owned by a Vietnamese family. Those are some dynamite donuts. They sell these things called kolaches. It's like a spicy sausage wrapped in a bun. Oh man. Still coming on down, 25,251, dropping. There's a local donut place in our house, way better than Krispy Kreme. Yeah. Kolaches are amazing. Yeah. Very interesting. Very interesting. ES is dead flat. VIX is heading back higher just slightly. Oil still chilling under their target. Every single time there's sideways crap, we get some outlier move. Yep. Especially with the VIX like this. This is not a 14 VIX. This is almost a 19 VIX. IVs are still jacked. So far, the only thing I've seen this morning is the 3C short on gold, which was beautiful. And so far, the 3C short on oil, which is still playing out. It's still in the works. NASDAQ had a decent 3C long opportunity here, but it was before 9:45, so I wasn't really actively trading that. So you remember I had a poison ivy outbreak last week, like a terrible, terrible poison ivy outbreak, and now it's like healed up, but my skin is left all dry and patchy after that. So it's like awfully, awfully itchy. Like I want to go get my power sander and sand my skin off. It's terrible. What's up, Dan? How you doing, buddy? Oh my gosh. What's up, Nathan? How you doing? Watch oil. If oil can break this pivot, we'll get a retracement back down to low of the day of 58.46 after that kind of volume. High volume spikes on every sell. Got to get some movement. Well, this turned boring pretty quick. Russian nuclear codes are potentially indicating that a test launch of nuclear missiles are imminent as part of their growing nuclear exercises. Interesting. There goes oil, slowly. ES is dead flat here, starting to come up. VIX is holding 1841. You think Putin, any other world leader, would YOLO nukes before he dies? I mean, I guess it's possible. That's the only way that Russia would ever use nukes. I mean, they still have to think about their legacy, I guess. I mean, these guys have big egos, and do you think Putin wants his legacy for the rest of his life to be, the guy that ended Russia? YOLO nukes, yeah. Sorry to repeat the question, but can you talk about what triggers moving stops? Yes, sir, or ma'am. So when I look for triggering a stop, I want a liquidity to be breached, because the whole theme of my stops is I want to be, my entries, I want to be on the same side as the market movement. Obviously, no one wants to be against the market. That sucks. Number two, when I'm in a trade, I want the market to be supportive of my position. I want the market to be defending my position, like the front line of a Revolutionary War battle. The whole guys standing in the line of the muskets, I want them to be my liquidity. So let's say I'm long here, theoretically. I'm not, but let's say I'm long on NASDAQ. Any breach below this point, because see, we have a pivot here, we have a pivot here, we have the overnight pivot. So obviously, everything in this block is a liquidity level. Not to mention, for those who pull it, we're right at about the 50% mark on NASDAQ. So there's a whole bunch of stuff going on right here in this 242 level. So if you're long, I want to set my stop below that liquidity so the market has a chance to defend me. As this price action moves lower, the chances of getting wicked here, bottom wicked, are pretty decent. And then if it breaches that's the time to get out of a trade. That's when your thesis has failed, liquidity is too strong, it's time to get out. And then hopefully it doesn't You know, it just wicks into this area, bottom wicks, and then you stay in the position. As the market moves higher, if I'm long, then I'm going to use liquidity zones as my trigger. Like, for example, we have a high volume right here into this liquidity. Surprise, surprise. I'm going to use the market as a trigger for me to move up my stop. So if my stop is here and the market starts bouncing and we start taking out these liquidity zones, prior pivots, then once we take out this zone, then I need to move my stop up. Once we take out this zone, I'll move it up again. Once we start breaking this zone, I'll move it up again. Because every time you break a liquidity zone, it now brings in an SR zone that the market's going to use to induce support. Not to mention, you want to also get in the habit of locking in profit, because you don't want to leave a large move, leave your stop way down here, and then it comes all the way down and triggers you. So you want to get in the habit of locking in profits, but it's a balance between locking in your profit and don't take your position off the books too quickly and leave too much money on the table. Nah, I mean, bruh. My struggle is moving to break even too even. You want to hear a secret, Paul? Every single trader's problem is they move their stop to break even too fast, especially prop firm traders who are on prop firm rules. The second you see profit, the second you see your P&L switch to green, you put your stop at break even. And then what happens? It comes back and triggers you 95% of the time. It stops you out at break even, when if you would have just held for 5 more minutes, you would have made a ton of money. That's just what happens. Can we get a red day already? No. We have this liquidity here at 225. Things are very, very slow and tight. We have 9.8 million puts, 9.6 million in calls. Cranberry cheesecake delivery for my daughter. We can success. Ooh, cranberry cheesecake? Still iffy on the pumpkin spice cheesecake. Nice, Kennedy. That's awesome, dude. Beautiful. Still coming down here. Still dropping. Oil is about to take this move out and then hit our secondary target of 58.45. BYND halted again. Are they coming down? I saw someone went viral for being overly short on BYND. Nope, they are not coming down. Haven't taken a trade on NASDAQ here, but oil is playing out nicely. Beautiful 3C short on oil, and it's coming all the way down, baby. All the way down. I love it. 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 $58.55. You see that? Play it out. Booyah. Let's go. Upside hold is crazy. How do tell daily what kind of moves market may have as far as size to a small scalp versus continuation move? For example, some days I want to try and go for a bigger move and I hit break even because it retraces, or other days it just keeps going. You have no way of knowing that. Now, obviously, you can kind of increase your expectation based on momentum. If the VIX is super high and things are just jacked, then yeah, you can kind of anticipate larger moves, and if you want to take that risk, leave on positions for a longer period of time. But the overall theme is that you've got to let trades stay on the books as long as your thesis is as long as your thesis is intact. Look at this. Big time put buying just hit the books. We just went from 250 million of puts sold to 700 million of puts purchased. That's $1 billion just flowed into puts here. All the way down. Muy interesante. RIP that guy's port, yeah. The best trades can be the ones you accidentally leave on at a key pivot level and then come back to see you're up 100 points. Exactly. The best trades y'all can take are key pivots overnight session where you're sleeping through the management. You're not even just touching the trade. You set your position on there, you leave a decent stop on, and you go to sleep and you wake up, and I bet you more times than not you're going to wake up to profits. Try it with a micro one time, see how it goes. High volume bottom wick. There's that outlier move. There's no data that I can see. There's no tweet that I can see. We do have oil coming up here in 13 minutes. Also, I have to switch over to Bookmap in 13 minutes.